Good evening, guys. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. As we speak, Treasury Consulting is a multinational headquartered group. We are a multi asset and multinational hedge fund. By multi asset, I mean we actively take positions in multiple asset class of the globe, which includes base metal, commodities, agriculture, foreign exchange, and many more asset classes. And by multinational, I mean we actively take positions at multiple locations, which includes United States, European Union, and Asia Pacific region. But like I repeated many times, and I would continue to repeat that we are a proprietary hedge fund. By proprietary, I mean to say no third party. I repeat, no third party can invest capital in our funds. Treasury Consulting do not ask any third party to join the fund. We don't take third party investments in our fund. Today is 7th November 2022. Around 1.5 months from now, the world would be welcoming the most volatile year, which is 2023. I know after listening this tune, most of my enemies, people who do not like my straightforward opinions, they will feel offended again. But to me, it really, I never worried about that. Let it be honest. Because in 2022, somewhere when it started, I would say December 2021, I made a video and clearly told that 2022 would be an year of surprises. Basically, I would say 2022 would be an year for a huge volatility, I would say. And as we speak, we are completely aware that what the hell is happening in the system. We are completely aware about that. It is not, we are not aware about that. And 1.5 months before 2023, I am telling you right away that 2023 would be at least many times volatile than we are having 2022. So if 22 is more volatile than 21, then 23 would be more volatile than 22. You would see the bankruptcies of few big names. I'm not quoting these names because I am religiously watching their balance sheets, their corporate results, the total quantity of the debt they are raising, everything. The information is in public domain. I am watching this information very carefully. In 2023, you will see that inflation would reach its peak, rather beyond peak, that would be the right word. In many countries, you will see that inflation might be crossing more than 100%. Yes, you heard me very right, which means if today anything valued at $1, it would be $2. Energy prices in 2023 would skyrocket, and the contribution of this goes to Russia, Ukraine, and many other countries who loves the war. Please do not exclude United States, because United States love war. They really like war. Today United States is igniting war between few countries. I don't want to name these countries. When the appropriate time would come, I would be making a detailed video in that regards. And last but not the least, the contribution by the Federal Reserve. European Central Bank, Bank of England, Reserve Bank of India, and many other great institutions who are increasingly, I would say, who are increasingly hiking the rates without knowing that this hike won't suffice. Without knowing that this hike won't suffice. In 2023, I strongly feel that all those central banks, those who are trying to tame the supply side equation with the hike in the interest rate, they would create depression. Rather, they already created depression. Let it be honest. Today, 7th November 2022, I went through many articles and I got to know that Twitter employees, because according to public information, around 50%, which means half of the workforce of Twitter, already fired. 50%. Some articles even suggest that this quantity is near to 4,000. Some suggest it is 5,000. But in the absence of a perfect number, exact number, it is very difficult whether it is 4,000, 5,000, or maybe whatever number. Twitter employees filed class action lawsuit, according to few articles, and few are referring to the law of the California, which prohibit company not to fire until they give approximately 60 days of the notice period. So there are many action which is happening in the background. If you refer Twitter, you would get to know. We are already in depression. There is no doubt about that. If not in depression, then we are already in recession and we are moving towards depression. Many top companies of the globe, they are cutting the jobs. There is hardly any doubt that they are not cutting the jobs. That's a separate thing that we do not wanted to acknowledge that, because our ego, comes, and this is the reason we never acknowledged these kind of thing. But jobs are rampantly cut worldwide. Rampantly should be an appropriate word, worldwide. And jobs cutting is not happening in terms of 100 employees, 200 employees, 300 employees. Rather, it is happening 500, 600, 700, 800, 1000, 1100, and so on and so forth. So on and so forth. Today, on 7th November, Zuckerberg, the founder of Facebook, they made it very clear that he is going to be cutting a great quantity of the people. What's an exact quantum of the great quantity? I'm not aware, but as we speak, that Facebook is having around 85,000 to between 88,000, according to few public articles. This is the workforce of Facebook, and the complete freeze is there in Facebook. No fresh hiring is going on, and many projects being shut down to save the cost. So I guess around 10% of the workforce definitely is on the radar, but I'm waiting for the official announcement by the Facebook. Lyft, who is a loss-making company, fired 700 employees. Fintech giant Stripe, a payment company in short, fired around 1100 people, and the list is really, really, really very long. Let it be honest, list is long. So, but the point is the gold. That's the most important point, which is difficult to answer in 2022 23. Because in 2023, what I strongly feel that gold would be the most volatile commodity in the world. We would have few agricultural commodities also that would be highly, highly volatile. But in base metals, in precious metals, gold would be the most volatile in the world. And in this upcoming part, I would be sharing my vision towards the gold. You all know that I run my three gold funds: Gold Fund 1, second, and third. I'm running my own silver fund, Silver Fund 1, and if God willing, we would be having one more silver fund in 2023. But one thing we are very clear and straightforward, that our gold funds are not open for public, which effectively means that no third party can invest in our gold funds, and we never share our strategies in the public domain. That's also a very interesting thing. And God is very kind that we made substantial profit in gold as well as silver, because we never worried about the media, the newspapers, the magazine, their forecast about the gold and so on and so forth. Example: 2 months ago, Credit Suisse article was in public. Rather, I don't wanted to name that website, but that website seriously promoted that article, and that article is saying that gold may touch 1450 by end of November. 1450. And I'm sure that thousands of people would have read this article because it is uploaded on a very famous website. I don't want to quote this. But I completely, rather outrightly disregard this article, because I know that how exactly these brokerages firms work. And Credit Suisse history is not unknown to me, at least I can say. My YouTube channel is a witness that on time to time basis, we covered Credit Suisse in a very detailed manner, let it be honest. My outlook for 2023, specifically speaking, gold, is that central banks have their limit to hike the interest rate. And I can once again substantiate this fact from, I can substantiate my statement with facts, which is three central banks of the globe. Number one is the Central Bank of Canada. Number two is the RBA, Reserve Bank of Australia. Number three is the Bank of Japan. Three. We have one more, but I'm not discussing that in this video. I would have separate video on this. Central Bank of Canada, Reserve Bank of Australia, and Bank of Japan. They clearly told to public that they are at the fag end of the tightening. When it comes to the former two, Canada and Australia, they clearly made it to the public that please do not expect unwanted or exaggerated hikes from our side. They made it very clear to the public, which means that if you are expecting at every policy meeting we would be hiking, then you are completely incorrect, because we won't be doing this. There is a limit to it, and we would adhere to our limit. This is what they clearly mention. About Bank of Japan, they are very clear, and I always appraise them, at least, which is they clearly said that the time is to revive the economy rather than hiking the rate. So Federal Reserve is hiking from last several months. Bank of England, European Central Bank, Central Bank of Korea, Malaysian Central Bank, Philippines Central Bank, Reserve Bank of India, Monetary Authority of Singapore. But Bank of Japan, one of the amongst top 4 central bank in the world, they made it very clear and straightforward that go to hell, we won't be hiking the rate. As simple as that. Because you people are committing the mistake, we are not committing the mistake, and this is exactly what is happening. The sovereign curve at many places is more than 4% and 5%. Like if I speak about Bank of England, then the sovereign curve is almost 5%, which means a heavy interest cost to Bank of England. And guys, from where the Bank of England would be paying the cost? It's a taxpayer money. It's a common sense. There is. I don't think I need to. I need to let you know. Central banks are having their limit in terms of hiking the rate. They can't cross that limit, which effectively means that they will move from hawkish to dovish, which means they don't expand, they don't hike exorbitantly. Because let me give you an example of United States. Almost every week now, thousands of employees are asked to wind up. And it's not that the company is entering into the bankruptcy mode or company don't have any work, but companies are very clear that we can't uh, take you because our business is coming down, our expenses are going up, we need to manage ourselves, and this is the reason we are cutting the jobs. Like very recently, many banks in US made it clear that if the trend would continue, then the only step left is the firing. Rather, JP Morgan Chase and many other banks in US, they are already cutting the jobs or putting a freeze. I see gold would go up in 2023 because Russia Ukraine war is entering into a decisive state. Today, on 7th November 2023, Zelensky made it very clear to the nation via his videos, which he is making every day, representing the nation. He made it very clear that please be prepared for the gruesome winter. Kiev mayor, the mayor of the capital, also uh, gave an interview which is in the public domain, and he made it very clear that if the scene would continue to be what it is today, then there is we have to leave Kiev. It means around 3.5 million people who are still living in the capital, they're not left. Kiev mayor made it very clear that we might be ending up leaving the capital because there won't be any power, any water. Then how we would be surviving in the gruesome winter? We know that how European winters are, especially in December and January. It's like complete freeze, negative degree temperature, and so on and so forth. Without power, how you would be surviving? And we all understand that what is happening in Kherson, what is happening in the other areas of Ukraine, Russia is shelling. Today, Iran also signed about $6.5 billion. You heard me very right. $6.5 billion worth of uh, the energy deals with the oil company of Russia, state owned oil company of Russia. And Iran said this deal can even go to 40 billion. Oh my goodness, 40 billion. So it might be a multi year energy deal. 40 billion. Guys, we need to remember one thing very clear and upfront is that Iran is coming straight forward in this war. Straight forward in this war. He hardly bothers about US, he hardly bothers about European Union, he hardly bothers about any other sanctions which people might be putting on Iran. The signing of the multi-billion deal, it's a clear example that the Russia-Iran relationship is moving in a conducive direction as far as Putin is concerned. But as far as the Zelensky is concerned, this is not conducive. Which means that Iran might be providing some sophisticated weapons, which may include drones, might be including ballistic missiles, might be some another different form of weapons to Russia, who is currently facing shortage of weapons thanks to the sanctions by the US. Which practically means that the war would take an ugly turn at any given point of time. Please note, at any given point of time. It might be in 2022, probably in 2023 himself, probably in the mid, at any given point of time. Because if the Russia would have the weapons, then they would love to take Ukraine as early as possible. And unfortunately, I repeat, unfortunately, Ukraine is completely dependent on the US, Germany, and other NATO countries for their weapons. That's a hard reality as we speak. About North Korea and South Korea, you know what is happening. 3 days ago, the scene was like that. North Korea 180 warplanes, not 1, 2, 180. They were in the area, in the air, pointing towards south. And all of a sudden, South Korea scrambles to have 80 stealth in the air. It was more or less a war, let it be honest. Israel versus Iran, Israel versus many countries, which is happening as we speak. I see gold would move in an upward direction because in the last 3 to 4 months, I am noticing that the people are trying to buy gold at 1630 levels. And I also strongly feel that 1630 is a good level to hold gold for a longer period of time. But having said that, when we speak about gold, we need to understand that gold hedging can be possible in multiple ways. Number one, there are many people who take gold in the physical form. They buy gold physical and then they hold it, and when they get profit, they go to jeweler and they do whatever buy sell. Second is people hedge in COMEX platform like me. They take positions in COMEX platform, CFDs, contract for differences, and many times they take a counter position of that as well. Third is, which is people in India are doing, they take positions in MCX in futures, which is really expensive, I would say, as far as the brokerage is concerned. And secondly, it is, the movement in the COMEX do not correlate with the movement in the MCX. People claim that it is because of INR, but I completely disregard. I am a treasurer, I don't disregard that. I strongly feel that we, at least my fund, would be buying gold from the bottom. Now, that bottom is really an interpretation issue because I am consistently watching the markets and I am consistently, changing my definition of the bottom. That's one thing. So to me, bottom is 1600 today. Probably it will go to 1550 tomorrow. Maybe it will change to 1650 tomorrow. Definition of the bottom is changing for me because I'm consistently tracking the gold. Last but not the least, central banks across the globe are consistently buying gold, especially to Russia and China. They are buying gold, extensively physical gold. Russia and China both are selling US dollars, or technically speaking, they are cutting US dollars. China sold majority of the treasury securities they are holding of US. And as we speak, Chinese yuan is the fifth most traded currency we have in the globe. I am bullish on gold. To me, it hardly matters whether the media, the newspaper, the magazines, the paid anchors, they are in agreement with me or not. To me, it always hardly matters. I am bullish in gold because 2 days ago, when it went to 1620, people sold extensively in the COMEX and MCX and they booked heavy losses while we bought and we booked profits. I am continuously tracking markets, especially the war related news, especially the weapons, especially what's happening in the Russia and Ukraine and North Korea, South Korea, Iran, Saudi, Israel, and many such countries. But I am bullish on gold. I'm not giving any levels, but I feel that gold is having a great momentum in 2023. But at the same point of time, the implied volatility of the gold would be very high in 2023. Very high, probably much more higher than in 2022. And you need to hedge it very, very carefully. Stupidity is not warranted. That is what I can say. And I love to say. Well, at the end, we are not enticing or we are not asking anyone to buy gold. This is my personal opinion. Treasury Consulting is not telling anyone to do any trading in the gold, be it MCX, COMEX, CFD, or anywhere. This is my personal opinion, which I'm sharing. If you would be doing, you would be responsible yourself. We are not telling anyone to do any form of trading. But yes, having said that, in the last 3 to 4 months, whatever media said about gold, the market reacted complete opposite to it, which ends up heavy losses to investors, especially those who are taking big positions in the gold. And to conclude, 2023 would be a highly volatile year in terms of commodities, be it whatever. Thank you very much, guys. This is Rahul Magan from Treasury Consulting Group. You knew my personal number, +91 9899 242 978. Have a great time ahead. Talk soon. Thank you, guys.